All right, traders, welcome to State of the Market with Simpler Trading. I'm Raghee Horner. Great to see everybody. Let's make sure our audio and video is good to go. Thanks for joining me for the next 30 minutes. We're going to be talking about the markets, what I see in the upcoming days and weeks, probably an outlook, a time horizon between now and about the end of January. We're going to talk about some seasonal tendencies as well as some markets that are on my radar. All right, so excellent. Let's get to it. First of all, the charts you see here are the charts from Thinkorswim. We're going to be focusing on mostly the daily time frame in our discussion here together. A couple interesting things that are on my radar for this week is the first trading day of January, of the January expiration, has actually been pretty bullish for the Dow, generally speaking, but more recently, as of the last 7 years, it's been a little bit more bearish. So we kind of have an interesting tug of war between two composites, one of about 28 years and one of the last 7. So that's something that I'll be keeping an eye on. And I'm just looking at some tendencies. I love using the Stock Traders Almanac, just something that I've used on and off for years. It's not blindly following, for example, a setup because there is a seasonal tendency, but rather looking at different trades that I'm already watching and then seeing if those overlap. So kind of neat tool that I'll use here in my office. All right, so let's kick off our discussion with the broader averages first. We'll go index, then we'll go sector, then we'll go individual stock. If you have any requests, feel free to ask. All right. And by the way, if you don't already know, and I'm sure a lot of you do, coffee segment. So if you've never caught that before, do check that out. Every morning, we take live questions. We prepare for the day in a fairly succinct 20-minute session before the bell rings. That way you guys have time to go to your respective simpler rooms, options, futures, Fibonacci, etc. All right. So starting off with the broader averages. Today, a little bit of a stall. That's fine. We've seen stalling days. I would consider this a stall, and here's why. Let's talk about what this candle is on the daily time frame of the S&P. All right. Now, what is this candle? This candle is known as an inside day because it's trading below the high of Friday and above the low of Friday. So it's above the previous session's low and it's below the previous session's high. In other words, well, how clever is this name? It's inside that session. All right. It's inside that session. Therefore, it's known as an inside day. All right. Only slightly less popular than one of my favorite movies called Inside Man. You guys ever see that movie? Inside Man. Good movie. Good movie. All right. That is an inside day. All right. What do we know about this? It's a pause. It's on a reversal, gang. A lot of folks get a little ahead of themselves on these kind of inside days or minor high type moves within the context of an uptrend. Yes, it could be the precursor for a bit of a move lower, but it's simply a pause. Let's not make more of it. And the setup on the heels of this would be, are we trading higher? Are we trading through this high? Right? Can we get through that high? Or will we ultimately, with some bearish momentum, get through that low? And all of that is going to be really contingent on whatever this next candle is, meaning Tuesday's candle. Whatever this candle is going to bring, it could be a trigger of continuation to the upside or move to the downside. I would prefer a move to the downside because ultimately that move to the downside is going to be a trade that we can take advantage of, pullbacks, right? Taking advantage of that swing, that daily time frame retracement, something that we would call a swing. So I would love to see that. Another thing that I want to really, really drive home, gang, is even if we get a bit of a pullback in this area, and even if we were to go a little bit more sideways on our overall market trend, I am definitely bullish. Why? Double green, double green. That's been the dominant psychology. And even when we go a little neutral with our yellow back in here, let's not make too much of this, because this has really been a continuation zone, okay, for bulls. All right, let's not assume that a stall is a reversal, even when it comes with some red grab candles, right? Because usually those red grab candles are going to indicate oversold markets, oversold buying opportunities. And this is really what we're looking for, to go from neutral to that bullish continuation you can see in here. So for sure, I'm interested in that move lower, ultimately giving us potentially a move to the upside. And the S&P is not the only market that I'm focused on for this. The Dow is the same way. The Russell is the same way. The NASDAQ is the same way. And then, of course, let's go from the sector. Let's go from the index to the sector level. Do I like IYT to the upside? This is the transports. Those of you that are fans of Dow theory will know how important transports were to Charles Dow, to Dow theory. And you'll notice that we had a little bit of a yellow market that has just today, really exciting, freshly gone back to that bullish directional bias, So we'll be looking for more upside there. That's bullish for the Dow. What about XLI, the industrials? Also transitioning from that yellow mark. So notice here, gang, something that happens again and again. If the preceding trend before a little bit of a stall, chop, yellow market, if the preceding trend was green, gang, the probability is for what? A reversal? No, a continuation. And so you take advantage of those oversold levels in that environment and set up for a continuation. Okay? So, look, same thing here, right? Same thing in this area. And here we go. Once again, love this kind of market environment. We've got our double green once again. Okay. So I hope when you see visually these repeating patterns, when you see visually that this market is behaving in a similar way again and again and again, you then know, all right, we've seen this before. And I know the high probability play will be a continuation to the upside. All right, look, I was kind of teasing during Charts and Coffee that I've got my bull shirt on, right? Because I have that bullish directional bias. Okay, so that kind of covers some basic index sector, and even getting down to the stock level, heavily weighted stocks within the sectors, your Apples, your Microsofts, your Facebooks, making sure we're choosing the best market for bullishness. Facebook is not one of them. Looking at Facebook in either direction really is not something I want to do. However, I've got a lot of questions about Facebook because people are wondering if this move lower is the beginning of a downtrend. Well, nope, because the trend that preceded the chop was up. So as I get into this area here, right, including right in there, that's a 200 EMA, I'll be looking to get long in this area, gang. So now we're getting down to the lower edge of a yellow market, of a yellow choppy market. And in a choppy market, yellow wave, your edge is at the edge. Keep that in mind. All right, so a couple questions here to kick off some Q&A. Hey there, Nick. Do I see major indices resuming trends into new highs after the retest there? Yes, absolutely. Yeah, absolutely. I do see the major indices doing it. And you actually, some of the names here, Starbucks is absolutely a name that we've been looking to the upside. In fact, I'm trying to think here. Let's see. I know I have the setup alert. I'm actually looking at our Sector Secrets Mastery chat room where I have all the alerts posted. And Starbucks is one of them. In fact, we want to get back into Starbucks for a second trade in a very short period of time because the trend has been very, very nicely up. And so Starbucks, I love double green. Double green within the XLY consumer discretionary ETF. Love it. Yeah, absolutely. Absolutely. Nike also in the same boat as Starbucks. In fact, those two are two of my favorite ways to trade stocks within the XLY. It's just what we need another pullback in Nike. Last time we saw a pullback was on the 4th to 5th of January. But look, we'll get them. We've had them many, many times. Let me clean this chart up a little bit. And what you guys see that I'll do a lot, if you don't know, this is very much a tactic that I deploy in the Sector Secrets Mastery, and that is having price alerts. Having price alerts acting as a second set of eyes so that if I get a trade down to, say, 140.55, and that is something I'd be looking for, 140.55 in we're talking about Nike here, a daily time frame, by the way. Daily time frame of Nike. If I get a trade down to that level, I'll think about looking at the 140 calls in Nike in order to get long. Bullish sector within a bullish index. XLY is heavily weighted within the NAS and heavily weighted within the S&P. So I have a strong stock and a strong sector with strong index sector stock. So I just need to pull back to do this. And we've had so many opportunities to play those pullbacks. I love Nike there, Nick. CMG, that is not a name. Sorry. That is not a name that I have been following as much. I can't say that I love it. And I think you guys will notice two things. A couple patterns you've already learned just in this brief time here together. We have a yellow market. We have a yellow market again, but we have had small windows of green and then a very large double green bulk of time. My bias is bullish. This is bullish directional bias, which means long only, gang. You really want to be a one-way trader. This is going to dominate everything I'm going to do. In green markets, we'll take advantage of the pullbacks. In yellow markets, I'll look for oversold buys. That means I'm back really to looking at an oversold buy in CMG. And I'd much rather be focusing on a little bit better bullish structure, but this is okay. And it's certainly bullish structure. It's certainly bullish structure. Okay, last on your list. Yeah, Amazon has been one I am, again, very uninterested in, really uninterested in it. And here's why. How long has this thing been going sideways? Now, we have a few folks that are a little bit more advanced in our mastery that are very comfortable building, say, iron condors. Because in yellow markets, especially prolonged yellow markets, ranges like this, income strategies are excellent, all right? However, if I then, let's do this. If I move out to the, bear with me here. We've been in the TAN ETF. That's been very good to us. If I move to take a look at the XLY, where Amazon is heavily weighted, number one stock. Is it the best stock that I could trade in XLY? Wouldn't I be better off even trading XLY as opposed to trading Amazon? Yes. Tesla's number 2 in this. Nike. There's your Nike and Starbucks. Love that. What about Target, TJ Maxx, General Motors? Lots of double green here to like. More than Amazon. More than Amazon. In fact, I think that McDonald's, while it's double yellow, one thing that could be really interesting with McDonald's is the fact that it has traded into a very narrow zone. This is going to be a little less about chop. There's two ways you can look at a sideways yellow market. Double yellow, yes, can be chop, aka distribution. But if the double yellow has mostly blue grab candles, gang, we can look at this as a sideways market, right? It's still sideways, right? It's still a sideways market, but it's a little bit more compressed. It's a little bit more accumulation. It's a little bit narrower, right? The hallmark of distribution versus accumulation is how narrow is it? How many blue grab candles do we have? And if we have more, we're probably looking at a squeeze environment. If the trend that preceded the chop and now this kind of compressed market is sideways, I think we might see for McDonald's a pretty nice move to the upside. I'd rather be long. I'd rather be long and as close to this 200 exponential moving average as possible. Absolutely. And we're going into earnings. Earnings are very close. So if we're looking for a very small window, bullish window, that might be it. I'm not a big fan of taking something through earnings unless I have a large enough unrealized profit to sit through, say, the expected move. But we could see a nice little move into this release. It's not giving us a lot of time, but it could be a pretty good one. All right. But I think here's the last part of your question that I got to address. I don't really care at all. It's not going to distract me. It's not going to influence me. It's not good. It's not bad, but I just don't pay it any mind. I don't say I don't care in a flippant way or in a way that I'm completely, well, I am sort of dismissing it. I don't use weekly charts because remember, if a weekly chart moves, right? If a weekly chart moves, the weekly chart, think about this for a moment. There's a daily price movement range. What is the price move on a stock in one session? Daily price movement range, but there's a weekly and there's a monthly and there's an hourly, right? Each time frame has its own historical volatility. So a weekly could run off and do something that the daily, right? If you're calibrated to daily price movement, if you're calibrated to a daily price movement range, risk reward, if you're setting something up on the weekly, cool. But I find most traders are really not financially or emotionally or even just time horizon wise equipped, prepared for what a weekly can do and how long it takes and how much further out the expiration. I just don't pay attention at all. I like that the weekly may be agreeing directionally with the daily, but it's not going to play a role. So I love all those symbols. I think they look great on the dailies, but I really could care less what is happening on the weekly. So that's not to dismiss those of you that do care about the weeklies, but think about what that weekly is really saying and what it's saying something about. It's saying something about a single candle that takes an entire week to form, an entire week's worth of range. And that is not always going to be, from a timing perspective or a price perspective or a risk perspective, ideal for traders who are calibrating to a shorter term time frame. So think about that, and I hope that makes sense. I wanted to give you a little bit of the why. Okay. All right. So NVIDIA. All right. I love where your head's at there, Nick. Is it going to switch from a yellow to a double green soon? Not yet. No, not yet. We've finally seen that breakout, right? We've seen that breakout, but I don't think we're quite there yet. No, a little early. But again, think about the trend that preceded the chop. It was green. I sure as heck am not going to short it, right? So directionally, I know what I want to do. And by the way, notice I didn't need another time frame to determine that. Directionally, I already know what I want to do. Right? So just kind of going back to that question about the weekly, do I use the weekly time frame for trend confirmation? No, I use the time frame that I'm trading for trend confirmation, right? Do I care that a weekly is heading higher? Look, a weekly could pull back and absolutely decimate support levels on a daily. Think about that for a moment. This weekly could pull back to 459. Right? It could pull back to 459 and still be an intact weekly trend, right? The daily, what if on the daily we moved to 459? 459. That's down here. That's the bottom of the daily range in terms of chop. Does that make sense? So if someone's thinking, well, the weekly broke out, but the support can go all the way down to 459. Well, that's this area here. That's an oversold buy. So that's what I mean about thinking about the weekly levels and do they jive with the daily. I'm actually, and by the way, I'm not separating out the weekly, right? This philosophy isn't just, the weekly. I'm not a fan of multiple time frame confirmation. And I know that's, oh my gosh, Rog, trading dogma is full of the value of multiple time frame confirmation. I think that if we're seeing cascading markets, the 5 starts moving higher, and the 5 organizes, and the 15 starts to, and the 30 starts to, and the 60 starts to. Okay, great. It's a great way to take the pulse of the market, right? Okay, pulse is good. But I am not a big fan of multiple time frame confirmation. So the weekly falls within that category. If you find multiple time frame confirmation works for you, great. Don't let what I'm saying deter you from something that's working. But if you're using multiple time frame confirmation, it's not quite cutting it. Ask yourself, why are you so devoted to it? I cut that completely about 7 or 8 years ago. Yeah, and I'm down to either day trading in 1 minute or watching a daily and nothing in between. And I cannot tell you how much happier I am without having to scan 6 and 7 time frames. Think about it. Scanning 6 and 7 time frames is akin to almost looking at 6 or 7 different markets, right? How do I know the 60s time frame on the same symbol is better than the 15, is better than the daily, is better than the 5? So not only are you jumping through the hoop of picking the right symbol, now you're jumping through the hoop of trying to pick the right time frame. I've completely eliminated different time frames other than one short and one long. It could be a daily and a 1 minute. It could be a 5 minute and a 480. It could be a 30 minute and a weekly, but you pick one short, one long, and you stay in those lanes. That's really, for me, after 3 decades, most of which was dominated by this multiple time frame confirmation approach, I've completely ditched it. Completely. My outlook on the NQ, bullish, Michael. Yeah, just the same as I talked about at the onset of the chat here. But yes, I'm very bullish, and I'm bullish the XLY too. Hey, by the way, gang, we talked about Starbucks earlier. That was Nick's question. We just rolled out of a nice win in Starbucks, but $1,000 a contract. I've got a webinar coming up, by the way, on Wednesday. Webinar number 2. We did one last Wednesday. You can check that out at simplertrading.com/hour, HOUR hyphen replay. And we have another webinar coming up, 2021 Outlook. What is the strategy? What are the patterns that I'm going to be looking for in 2021? Might surprise you. That'll be Wednesday at 8 p.m. So quick reminder there. Thanks to the office for that reminder. Do I lose week? So no, Seth, and thank you, gang, for the questions, but you realize it's coming from a much bigger philosophical approach of no multiple time frame confirmation. Build a chart on the time frame you want to trade, stick with that time frame. That's the way I look at it. Now, can you use shorter term time frames for some nuance? Sure, but be really close. Be really close. Be really, keep that tight. Don't let one type of trade morph into another, because time frames do influence clearly the amount of attention you have, and they're going to influence your thresholds of risk. They're going to influence your thresholds of reward. 1 minute, 5 minute time frame is going to hit reward levels and risk levels much, much quicker than a 240 or a daily time frame. So think about that. All right. And Nick, I'm with you. I'd love to see the dip sooner rather than later. And that brings us to whether or not we're going to see that mid-month window undressing. All right. We have the window dressing rally at the end of the year. We have a window undressing sell-off, typically mid to late month in January, almost every year. And so, yeah, I would anticipate to see that happen. I have some long positions on right now in our mastery, but I'm thinking we might hit targets, or they're trades like Exxon, where we're seeing targets hit, or they're trades like AMD, where we're seeing targets hit. Now, why do I differentiate those? These are trades we just put on, right? We've only been trading, only 11 days into the new year. We've already put a number of trades on, and the cool thing is, if we get this big move to the downside, these trades are at break-even levels. So, all right, I'm willing to risk some unrealized profit, but this is not going to turn into a loser. Remember the cardinal rule of trading: don't let a winner turn into a loser. So in some of these situations, and then in other situations, I'm looking for a market to pull back and give us an entry long. And then, for example, this was an alert we had for Dropbox on the, just to give you an idea of what I do, right? What am I looking for? This was on Thursday of last week. Dropbox was to buy the 21 calls. All right, so here's your zone right in here. We wanted to buy Dropbox from 2210, right? From 2210. And so, that's the kind of setup. So notice once again, exhaustion. Notice what we were taking advantage of. Movement lower. Who wants Dropbox? Everybody wants it today, right? But where do we sneak in? Right in here. That's what we're looking to do. That's the setup. All right. I hope that makes sense. It's philosophically a very different way of trading because most traders like to buy higher highs, right? That's probably 80+% of market participants. Okay. All right. So moving on. Yeah, Stephen, and thank you. I appreciate that. I really do. The way in which I hear you, my friend Stephen. So everybody here, I used to track 1 or 3, 5, 15, 30, 60, 120, 240, 480, and daily. And some of you who've been with me for a lot of years probably remember those days. Doesn't seem that all that long ago. I stopped doing that almost completely about 5 years ago, sort of reducing the time frames to 3 to 4 about 7 or 8 years ago. And as of now, day trading from 9:30 to 11:30, end of day, time frame, trend following swing trades for the most part in the afternoon. Or just, that's my second style and second time frame. And I just think it's too many hoops to jump through. I think to find the right symbol, to find the time frame that's moving with the right type of market environment, it's really a double scan. And you're really now jumping through 2 hoops lit on fire, right? Talk about some kind of circus trick. Reduce the number of time frames and see what you think. Yeah, Stephen, I think it's made a huge difference in my focus and in my trading. So next up is the seasonality. Yeah, so the seasonality, it's called Market Q View, Banana Republic. I don't know anything about them, but it's called Market Q View. It's free. And then I'll look at that. And plus for different seasonalities, like I said, I'll have the Market Q View. This is a little bit more granular, Stock Trader's Almanac. That's really it. It's not going to override a setup, but it's there to basically supplement, not supplant, to supplement. So thank you for the question. Next up is, do I do anything with Ichimoku? I've played around with Ichimoku in my career and not necessarily not necessarily something that's really a huge, it's a support and resistance tool. I'm happy to jump into it maybe one of the mornings in the charts and coffee segment, but no, I don't use it. Not that there's anything wrong with it, but I found the tools that I use. And so basically here's what I would recommend. Great question. Not that there's any tool that you guys ask me that I don't use. It doesn't mean I don't like it. It just means I have a tool that already answers the question. So what questions do your tools need to answer? I think in the most basic way when it comes to price, we're talking support and resistance, right? But I think you also want a view of your tools looking through the sort of the prism of volume, looking through the prism of volatility, and then also time. So I look at all 4 of those elements. I'm measuring volume for support and resistance. I'm measuring volatility. First, yes, you can use volatility for support and resistance. And then time, maybe not so much support and resistance, but in many ways, it's going to be exits and entries, and even relating back to volume and volatility. So it kind of goes back to volume and volatility. So it's sort of related to those. So if you feel that any tool answers these questions in a way that you visually resonate with and feel confident, then that's your set of tools, right? But what I'll say is that's what you need. That's what you need, right? It's like a good kitchen. I don't care if you use all clad versus Cuisinart versus whatever, pans, right? Pots and pans. But as long as you have a pot and a pan and a utensil to get the job done, right? That's all that matters. That's all that matters. So I hope that helps. So it doesn't matter if it's Renko, doesn't matter if it's Ichimoku, doesn't matter if you're using Bollinger Bands, whatever it is. And I don't use any of those, but that doesn't mean they're not good tools. It just means that I've got tools already, most of which I've designed for myself. Most of my tools are tools that I've created because I wanted the answer in a very specific way. So I hope that helps. And I hope that helps and gives you some freedom to go seek out the tools that you like. I think a lot of times we're all trying to find our favorite, maybe we find a trader we like and we find out their favorite tools. But it's like pretending that you're going to like your best friend's favorite ice cream flavor and their favorite meal and their favorite way to prepare it. You may not, So be willing to just answer the question. Do I have a price-based tool, volume-based tool, volatility-based tool? And I understand how time affects the other three. And as long as you have a tool or tools that answer those, you're right as rain. Okay? That's how you become the best trader you were destined to be versus a mini-me of somebody else. It's got to, and sometimes the tools of someone else will resonate with you. And then far be it for me to try to talk you out of it. I hope that helped because that's a common question. What tools, do you use this tool or this indicator or this strategy? Sometimes and oftentimes I don't. Okay. Let's see here. Question is, do I do my research in the afternoon and put my trades on in the morning? Usually Carmela the Pug, I love that. I usually do my research in the morning. But research kind of goes all day, doesn't it? But most of my trading plan research, if you want to call it, levels I'm looking at. For example, levels that I alerted our Sector Secrets Mastery folks to, like we were looking at ZS today and Honeywell and Freeport-McMoRan. For my futures room, we were looking at copper and euro. This was all done Sunday night. So I like it pre-market. Yeah, I like my research done pre-market because I think research is best done when the markets aren't moving actively, so you're not influenced by all the twitchiness, by all the activity. All right. So I hope that helped. Okay. Don't be disheartened if I don't use a tool that you guys use. There's a lot of ways to play this game. Read a book like The Market Wizards, the original, not the 19 that have come since, but the original Market Wizards, maybe the new Market Wizards. Read those and you'll realize those are all legendary traders that use all distinctly different ways to trade the market. What they found is what works for them, including the time frame and the asset class and the approach, right? So that's what I hope to help you. It's a great saying, having the knowledge to seek out more knowledge. That's what I want you guys to have, the knowledge to seek out more knowledge, right? And if I can help guide you through the markets, give you answers that I think work for me, and you find how that works for you, and you find whether or not you can see what I'm seeing, train your eyes. That's what we're trying to do here, for sure. Okay. All right. So with that being said, thank you so much. Rolled over a little bit. Sorry about that. Thank you so much for joining me for our State of the Market. We do this every week. We'll have another Simpler Trader do this with you all next week. But in the meanwhile, let me see if I can get this to pop.